I would choose a very specific value add formula with self storage. And if your time permits, I'll tell you what that is.
Let's hear it.
All right. So there are 53,000 self storage facilities in the country. They're growing by 2,000 this year. So I guess they'll be at, well, you do the math. No, it's 55,000. It was a joke. But seriously, 55,000 self-storage facilities in the country. It's believed that about 40,000 are operated by independent operators like mom and pops.
Wow.
Okay. And so there used to be a mantra, if you build it, they will come. And it was true because self-storage was new in the 70s and the 80s, and people could just build a self-storage facility on a field near town and it would fill up. And so these operators operated these like mom and pops. They operated these like a passive piece of real estate. And that was the draw for me. In 1999, I almost built a self-storage facility near a little town called Rocky Mount, Virginia. And I, had the land available and I thought about it, but then I thought, oh man, somebody else could throw in another 500 units right next door, and I couldn't really stop them. And I'm glad I didn't do it because I didn't know I would have been one of those mom and pops that needed to be acquired. But anyway, these mom and pop operators often don't have websites. They often build it for a fraction of today's value. They're getting a massive return on investment. They have a part-time person working a phone, and they don't have a showroom. They don't do a lot of marketing. They don't raise their rents. There's all kinds of things they don't do that a professional operator could do. So here's the opportunity, Whitney, and this, like I said, of all these asset classes, this is what I would do. I would go in and find a self-storage facility that's in the path of progress, but that's outdated, that is perhaps doesn't have a website, doesn't have great marketing, all these things, and maybe has some room to build additional units. I would acquire that. So number one, I would acquire from a mom and pop. They say you make money when you buy. Well, with this strategy, you make money when you buy, when you operate, and when you sell. So number one, I would acquire from a mom and pop. Number two, I would go in and change every policy and procedure that made sense. For example, I would add a really nice website. I would start looking for tenants who were not price sensitive. I would start culling off the tenants that were. I'd start raising rates to the market rent. I would start selling units individually to tenants based on their motivation, their income level, etc. In other words, we can get to know each tenant, and with Facebook and all the other tools we have out there, we can actually get to know these tenants. And we know if one comes from California and they're relocating and they're building a home and it's going to take them a year to build a home, well, they're not going to move. And we can raise their rates a little bit more than somebody else who's really price sensitive. So I would market that way. I would operate that way. I would add U-Haul, and that would, or Penske, and that would add 1,000 to 3,000 a month. I visited with one recently in Rockledge, Florida, that was saying that their revenue from U-Haul, their commissions alone were $5,000 a month. I would add U-Haul. I would add a showroom with locks, boxes, tape, and scissors for sale. I would add admin fees, late fees, and I would begin to really evaluate the demand in the market. A mom and pop owner just says, hey, we're out of 10 by 10, sorry. But a great operator prices the last one or two in a high demand unit size much higher. Yeah, we've got 10 by 10s, they're X, and they're higher than what we sold the one for last week. And I would additionally go in and evaluate what the sizes were that were in most demand, and then I would build more of that size. Or I would, this is just sheet metal and concrete, I would knock out some walls and reconfigure to get the sizes that were in the most demand. And that's what a professional operator does. And so I would operate well, and then I would plan to sell it to an institutional. In fact, I would do it with several in a region. I would bump them up to a professionally run operation. I would add units if I could, and then I would sell it to a REIT for a compressed cap rate. And so that is a long answer, but that's what I would do. And if you look at the value formula in commercial real estate versus the value formula for residential, you would you'll know why I would do it this way and why I would be in commercial real estate in general.